There are a lot of things to think about when you're getting ready to retire. But if you're like me, whether you're going to be able to sell your home and get a loan to buy another home wasn't really on my radar. I just assumed I'd be able to qualify for a mortgage when the time came. But one of my clients had an experience recently that really opened my eyes. Even though she owned property and had cash assets, she couldn't qualify for a mortgage. Why? Because from the lender's perspective, she just didn't have enough income. Once you retire, getting a mortgage is possible, but it isn't as easy as it was while you were working. In fact, for some people, like my client, it's downright impossible. And yet nobody tells you this before you retire. In this video, I'm going to talk about the things you need to consider if you're planning to buy a home after you retire, and why you might want to buy or downsize before you leave your job. Stick around to the end of this video to find out what you can do to ensure that you don't end up stuck in a home that you no longer want to live in. And if you're thinking about renting in retirement, check out the next video in this series where I look at the pros and cons of renting versus owning in retirement. Before I jump in, I just want to point out that I am not a lender or a financial advisor, and everyone's situation is different. So before you make any financial decisions, please sit down with an expert to discuss your options. Okay, back to my main question. Can you get a mortgage after you retire? When we look at our own financial wealth, we tend to include the whole picture together: savings, income, property, and other assets. But when a lender looks at whether you're a good risk for a loan, they're primarily interested in how much income you have coming in each month and if it's sufficient to pay your mortgage and the rest of your expenses. Lenders are looking for income that is what Fannie Mae describes as stable, predictable, and likely to continue. Stuff like Social Security or pension income. Lenders will also consider distributions from 401ks, IRAs, and other types of retirement assets. But because withdrawing from your retirement account depletes the value of the asset, it's not treated the same as income. You have it, but you're using it up. So to use this to qualify for a loan, you're going to have to show that distributions from your retirement accounts will continue at the same level for at least 3 years from the date of the mortgage. And lenders are only going to use about 70% of the value as qualifying income, because if you're like most of us, your retirement is stocks, bonds, and mutual funds. And as we know, these things can go down with market fluctuations. Lenders may also consider income from investments such as rental property or income from annuities, provided the annuity is going to continue for at least 3 years. What lenders won't consider is the value of your current home, even if you plan to sell the property after you purchase your new home, because it's not generating income. One of my regular lending partners, Michael Knotek, he's a senior mortgage banker at Bell Bank Mortgage. He told me it's actually a liability. You can't easily liquidate it. Now in this market, I might argue that point, but that's the lender's view. And regardless, in this seller's market, you don't want to be writing an offer on your dream retirement home that's contingent on the sale of your current home. It's just not a strong bargaining position. Now, there are a few things that you can do to make sure that your retirement goes as planned. Much of this advice is really similar to what any prospective homebuyer would get. You want to make sure that your credit rating is good. You want to make your payments on time and make sure that you're always making at least the minimum payment on your balance due. And you want to address any credit issues that you might have before you apply for a loan. Here's an interesting one. Don't cancel your credit cards when you retire. Having credit history is just as important in retirement as it was when you were a first-time homebuyer. And here's perhaps the most important piece of advice. Start planning for your retirement a couple of years before you retire. If you intend to move or downsize from your current home, it's really going to be easier to qualify for a mortgage while you're still working, and you still have time to address any gaps between the retirement you want and the retirement you can afford. So I hope this information has been helpful to you. Hit that subscribe button if you want to see more of my videos on home buying and selling in the Twin Cities area. My name is Jay Troutlowen. I'm a Minneapolis realtor and an expert at helping home buyers and sellers navigate the Twin Cities housing market.